Today we will be looking at a financial analysis of Netflix. It's important as we go through this to remember the long-term nature of the contracts that Netflix is involved in, and it's also important to remember that in 2011 they restructured their pricing strategy to separate out the DVD and the streaming lines. To begin with, we'll start with the total asset turnover, which is a measure of operating efficiency. We see an overall decline in this ratio, but a lot of that is due to increasing the library content that Netflix holds due to the internationalization that they're trying to do. So a lot of the revenues won't be recognized immediately from this additional content. Next, we will be looking at a measure of long-term solvency with Netflix, and that's the debt to equity ratio. We can tell from 2011 to 2012 this was increased and then declined in 2013. A lot of this decline was due to issuing additional notes, as well as the overall stock increasing by 10% from 2011 to 2013. Some of the additional notes that they issued, one was for $500 million in 2013, fourth quarter, and in the first quarter of 2014 they were expected to issue an additional $400 million of long-term debt. Now we will move into short-term solvency or liquidity, and we'll start out with the working capital. We can tell from 2011 to 2012 there was a decline in working capital, which is just your excess current assets over current liabilities. The greater this value is, the better position that Netflix is in because they have more cushion, which allows them to be more flexible in the projects that they pursue. We also have a current ratio in this that declines slightly in 2012 but then increases again in 2013, and that's a measure of current assets to current liabilities. As long as this is greater than 1, it means that Netflix will have the ability to cover all of the current obligations that it has using its current assets. Next, we'll take a look at Netflix's market capitalization. We can tell that there was a sharp decline in 2011, and a lot of that was due to the restructuring of the pricing that Netflix offered. After they recovered from that, there was started to be an increase. A lot of this graph, the volatility in it is due to the volatility of the market share or market price for Netflix. As we look at the consolidated revenues for Netflix, we can tell that there's a 36.5% increase from 2011 to 2013. And a lot of this increase comes from the domestic streaming segment. As we look at revenues by segment, we can tell that the domestic streaming is Netflix's largest revenue contribution segment. The next one is DVDs domestically. The international segment isn't as strong yet, but a lot of that is due to the contract, the long-term contracts and the trying to expand internationally. And this has led to a negative contribution profit for Netflix. Netflix experienced a sharp decline in net income for 2012 compared to 2011, and it increased slightly in 2013. A lot of that sharp decline was due to the long-term contracts again and just internationalizing and expanding into further markets. Next, we'll look at the return on assets, which is a measure of how efficiently Netflix is utilizing the assets to generate profits. We see that there's a sharp decline for 2012 again. A lot of that is once again due to increasing their library content, so they have greater assets, and it was also a decline in net income that caused that sharp decline. We also look at the return on equity, which is how efficient Netflix is utilizing the profits generated from shareholders' dollars, and that also experienced a sharp decline in 2012, once again from a decline in net income. We see an earnings per share decline in 2012, and a lot of that is due to net income decreasing, and then it increased again in 2013, so the earnings per share went back up. Looking at Netflix's content library, we can see an increase overall in all categories from 2012 to 2013. In 2011, they didn't have the content library split out by segment, but it was about $1.9 billion in total. Overall, we see that some of the major impacts that Netflix's financials have taken are due to the contracts, the long-term contracts and international expansion, as well as the library content and expanding that. that concludes our financial analysis of Netflix.